Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you are new here, welcome. Please take a look around. I talk about everything I just mentioned, plus looking into individual stocks, how to find individual stocks, determining your risk profile, what you're comfortable with, dividends, real estate. I have a Robinhood weekly challenge. I'm thinking about doing a M1 Finance monthly dividend challenge, just kind of keeping myself accountable to continuously add to my dividend account when possible to reach my goals. Thinking about that. So today I've got a great one for you, and my allergies are killing me. Allergies are killing me. Today we're going to talk about what to do when you've bought the top of a stock. And what that means is you've purchased at, let's say you bought Bitcoin at 69,000. Let's say you bought Tesla at, I don't even know how high Tesla got. Let's say you bought Tesla at the top and it tanked. Let's say you bought Renesola, ticker symbol SOL, at $30 and now it's at 3. You bought Digital Turbine at $100, now it's at 11. You've bought so many. A lot of stocks. You've bought Shopify, PayPal, Nvidia, whatever. You bought those stocks at the top, and now you're like, crap, I'm holding these bags. What should I do? I've got some wonderful news for you. Number one, investing into the stock market is amazing, so congratulations. Number two, investing in stocks is a lot different than investing in real estate, which is a lot different than investing in purses or other assets, wine, paintings, etc. The amazing thing about stocks is if you purchase Bitcoin at 69,000, you can purchase Bitcoin at 3,000. If it comes back down, you can continue to purchase Bitcoin as it comes down to lower your total average. Now, keep in mind, you only want to dollar cost average. You only want to buy the dip if you are buying something that is strong. If you got into PP coin or whatever, you bought the top. I don't know what to tell you. Wait for a cyclical downtrend and a bottoming. Maybe I wouldn't even. I don't even. If you bought PP and you've lost a lot of money, I can't help you. But you want to, if you have a solid stock that is producing profits or becoming profitable, growing, doing mergers and acquisitions, have a viable product or service, consider dollar cost averaging. And it may feel very uncomfortable to do so. You may have purchased Renesola at $10 and now it's at 3. And you could feel devastated and like, oh my God, what do I do? Like, I don't want to put any more money into it because it's going to keep going down. In the story, with the story of Renesola, that stock has cyclical moves, just like the stock market is very cyclical. It's continuing to grow. So do some research into that. Look into their earnings calls, look into what they're doing in terms of quarterly revenues, earnings, etc. Really do your homework and really fight the emotions. It never feels good to buy a stock when it goes down. I don't know who said this quote, but you want to buy stocks when there's blood in the streets, and that can feel very uncomfortable. You want to buy when others are greedy and sell when others are greedy, buy when others are fearful. If you are scared of buying a stock, you're probably not alone. And that's typically kind of when you want to buy if it is a solid, sound stock. Notice you don't hear me say crypto. If it's Bitcoin, yes. Okay, I can feel comfortable saying if it is Bitcoin, do your homework, do your research, talk to your financial advisor. A lot of these big firms, Fidelity, E-Trade, etc., are making Bitcoin investments possible. So that's a sign. But do some research. If the company is continuing to go strong and the stock price is going down, it doesn't make any sense. Take advantage. I'll share with you right now. I'm my Robinhood weekly challenge. I purchased ticker symbol AEY at $1.30. It went down to 80 cents, so down about 48%. Um, Now, why did the stock go down, and why am I talking about a stock down so much? Well, as the stock price is going down, the institutional ownership has gone up. Insiders are still getting their stock options, meaning there's hope for this company. If institutions are willing to spend $101,000 into purchasing stock when it's going down, maybe the market is getting the price wrong for the stock. Okay, fair, maybe Ryan, sure, whatever. Your stock is still down 40%, you suck. Okay. What if I told you the company is profitable and they do near $100 million in sales and their company is continuing to grow and they have contracts with the largest telecommunications networks in the US? What do you say to that? You know? So again, this ticker symbol is AEY. I've been talking about this stock for weeks. You can find it on my other videos, but you know, they have earnings on Monday. I think the market has this stock priced wrong, which is why I have over 30,000 shares in my Interactive Brokers at $1.30. I haven't dollar cost averaged down that one yet. I have 180 shares in my Robinhood account. Resources Limited LLC, whatever, purchased $101,000 worth, so 91,945 shares at $1.10. The executive level directors, CEO, C-level people are getting stock options. So I am buying the dip. And this is a solid company. And if it slumps down due to the market not getting it right, maybe they missed on a sale or something's going down, I'm going to wait for consolidation. So maybe it'll go down 50 cents, 40 cents. Consolidation, wait for, a bottom to be put in, wait for some good news, and then, start climbing that incline again and averaging down, because it is number one, a stock that's continuing to grow. Not only their revenues, their people, their sales, but share price, eventually. If the company is continuing to hit their targets, institutions are buying, stock options are still being granted, which is a good thing, meaning these people who have these stock options, they want to sell them at a profit in the future. And then just contracts with the largest provider. So that's why I'm buying that. Now let's shift this back over to you. You've bought at the top. Let me show you some cool stuff you can do. All right. Like I mentioned before, when you buy certain assets like real estate, painting, wine, stocks, some of these assets you are stuck with and you cannot readjust your price to get above water. For example, if you bought a $300,000 house and all of your neighbors start selling their houses at $200,000, you're still stuck paying that same interest rate on that $300,000 house. There's no adjusting the price you bought it at. Sure, you can refinance, you can do whatever, but you're still underwater at that $300,000 level. Meanwhile, your neighbors are liquidating at $200,000. You can't really average your house down. Another example, cars. You bought a Toyota Corolla for $50,000 because the car market was hot. You're stuck with that $50,000 purchase and paying on that. And you can, modify your loan or whatever, but you're stuck with that $50,000 payment, or not that payment, but that purchase price. Stocks, however, if you buy, let's say Renesola. I'm just going to stick with Renesola, be consistent. You bought Renesola at $30. The stock is now $3. You could sell it for a major loss, or you could average down, do some research, and consider what's going on. Same with AEY. Let's do my AEY to stay consistent with my narrative, I guess. So I had purchased 80 shares of AEY at $1.34. And you can see my screen. So that means I have 80 shares at $1.34. The stock price went down significantly just because the market's getting it wrong, not because the stock is doing anything bad or the company's doing anything bad. It's just going down. They did have a small offering, which was speculation, but you know, I'm not going to get into all that. Go watch my other videos. So I purchased 100 shares at 86 cents. So I have 80 shares at $1.34 and 100 shares at 86 cents. If you're able to do this math in your head, congrats. But let's now see what my new average is. My new average is $1.07 for 180 shares. And the current stock price of AEY is 88 cents. So I feel I can sleep at night. You know what I mean? I can still sleep just fine. But so now if I do that, 180 shares times 1.07. So I'm under $200, and you can see how I drastically brought my purchase price down from $1.34 down to $1.07. Let's say I purchase another 100 shares at 86 cents. If you can do the math, great. And then I can just calculate here. What do you think my new average is? 99 cents. So now I own 280 shares at 99 cents, which is going to put me around $280. $279.18. So you can see by not taking a huge risk at the very beginning of purchasing this stock, I'm able to use my extra funds to average down and bring my price closer to lower levels. So if I'm like, I want to get close to the level and then sell out at a minimal loss, or I want to get a better average for my longer term hold to then get some major appreciation. Depends on what strategy you want to do, etc. Let's say I buy another 100 shares at 86 cents. What do you think my new average is? It went from $1.34, $1.07, 99 cents. I'm gonna say it's now gonna be 96 cents. Yes, 96 cents. Okay. And again, I have 380 shares at 96 cents, and the current stock price is at 86 cents. So I am down, gosh, how do I even do this math off the top of my head? I'm down 10 cents from 86. So can I do 0.86 divided by 0.96? No. About 0.10 divided by 0.86. Yeah, so I'm down about 11 times 100. I'm down about 11.62% versus being down $1.34 and 86 cents. That's like 30+%. So I'm down a lot less. I've got a better average. It's going to do better for me in the long term. And as long as the company continues to execute, that's my main focus. And for you, if you purchase a stock that's gone up, we can do Bitcoin. Let's say Bitcoin, you bought one Bitcoin at $69,000. And it's not all your money because you're very smart and you don't go all in at the very beginning. So let's say you purchase one Bitcoin at $69,000. And then it goes down to $3,000. Let's say you bought 20 Bitcoins at $3,000. So now you're in the hole about $129,000. What do you think your average is for a Bitcoin? If you had one at 69,000 and then 20 at 3,000, let's see what your Bitcoin is now. Your average Bitcoin is now $6,142, and you have 21 Bitcoins. That is the power of investing in the stock market, and I'd just say Bitcoin because I guess Bitcoin is the index for crypto, and all the other cryptos are extremely speculative. Talk to your financial advisor. So again, the power of purchasing good, solid, sound, strong, handsome, beautiful, gorgeous stocks when they go down is valid as long as the company is still on the positive upward trajectory. So if you bought the top consider what's transpired with the company. Are they still doing well? They just hit a speed bump. Revisit, talk to your financial advisor, your CPA, whoever you use to invest that is licensed, not me, because I honestly don't know what I'm doing. And see, does it make sense to bring your price down? Another crazy one I want to talk to you guys about is ticker symbol IEP. This is Carl Icahn's stock. Look what happened to the stock over the last 5 days. I need to go back a little bit further. The stock was trading around $50, and then a short report was released on, I guess, the first or the second, and the stock went from $50 down to $30. That's a 40% drop. You know what I did? I freaking bought that dip. Hindenburg is, I guess, a reputable short firm, but they're doing it in the best of their interest. Carl Icahn, I understand Carl Icahn. I've seen him before. I know his fund. It's a dividend stock, so I bought the dip here. So I owned some at 50. Let's just say I owned. Say I own 10 shares at, no, I didn't own 10. I probably own 3 shares at $50. 30, yeah. 30 shares at $50, and then that dip happened it went down to 28 something, but it's only showing 30 here. And then I bought freaking 55 at $35, and then I bought another 65 at 32. So instead of having my IEP position being at $50, being down 40%, I took advantage of this dip because I know the fundamentals are strong. I understand Carl Icahn owns 84% plus of the company. And my new average is $36.70, owning 150 shares. So if I do the math, 150 shares times 36.7, I'm in for about $5,500. And this is a dividend paying stock, mind you. So this is a long-term stock. So that's, again, my new average is 36.7, and the current price of IEP is $35.40. I guess it closed out at $35.77, $35.84. So as you can see, my average is a lot lower to be very close to the current stock price. So in the future, when the stock goes up and increases in value, I've got a really low stock average. So I don't want to say I'm guaranteed to sell in Profitsville, but going on the trajectory over the next 5-10 years, I mean, it's going to be amazing. As long as IEP continues to produce billions of dollars of revenue, continues to do a dividend, continues to make businesses more efficient, etc. So that's my wrap. If you own a stock and you're down on it, do some homework, do some research. It might not be a bad idea to dollar cost average. You never want a dollar cost average if you are day trading, because you're just going to put yourself into a hole, and it's a big risk. Dollar cost averaging is more for your swing traders, long-term traders, year plus. So yeah, that's my spiel. If you guys made it this far, please consider subscribing to my channel. Hit the like button. I really appreciate you so much. I'm very excited whenever I get one view on a video, because it shows that I'm giving some value to someone, whether it's 5-10 minutes, whatever. I just appreciate all your time. So thank you. Hope you're doing well. Have a great day or night.